Today, 50 countries have officially signed the Article of Agreement to set up the Asian Infrastructure Investment Bank, which of course will be headquartered in Beijing, China, laying the foundation, of course, for another player in the global financial architecture. 7 countries, however, haven't signed up quite yet, but we'll be looking at what this institution means for the world and developing financing moving forward, and why all of a sudden the West seems to have changed its tune quite a bit on the AIIB's existence. Welcome to Global Business Africa. I'm Ramah Nyang. Here's what's coming up. South Africa's gold producers have tabled another wage offer to the unions. We'll have the details. And a lack of quality seed is seriously threatening food production and security in Uganda. Now, let's start in South Africa. Gold miners there have put up yet another offer on the table. This is part of ongoing worker wage talks with unions. Companies have offered gold miners a 5-year wage deal with a range of increases ranging up to 13% for the lowest paid workers. Now, the companies at the negotiating table include AngloGold Ashanti, Harmony Gold and Sibanye Gold. Also, they have offered artisans and other workers up to 6% wage hikes. That said, it looks like these talks are set to continue for a while longer. The sector's 2 largest unions, that's the National Union of Mine Workers and the Association of Mine Workers and Construction Union, AMCU, both are demanding wage hikes of around 80 to 100% for the lowest entry workers. South Africa's gold mining sector, however, is already struggling. Half of these mines are not even financially viable due to falling mineral prices and power shortages. It's feared that a protracted pay dispute will damage productivity and output even further. As we mentioned earlier, 50 countries have officially signed the Article of Agreement for the establishment of the Asian Infrastructure Investment Bank in Beijing, China. The 60-article agreement outlined the financial share each member has, how policy will be made, how operation systems are set up, and the governance structure of the AIIB. Australia was the first to sign the agreement. China, India and Russia, the 3 largest shareholders, followed by Germany, South Korea and Australia. China has a voting share of about 26.06%. India and Russia take up 7.5% and 5.92% respectively. The AIIB will have an authorized capital of $100 billion. Asian countries will contribute up to 75% of total capital. The institution headquarters will be in Beijing and it will be officially established by the end of the year. Now, the signing of these articles of agreement effectively lays the foundation for the AIIB. Here's Ming Tian with the details on the bank's structure, the distribution of voting rights as well.
The Asian Infrastructure Investment Bank has 3 major layers of operation: governors, directors, and senior management. Regional countries hold a majority of the stakes, with 75% of initial capital, and will stay above 70% should the bank get more capital in the future. Experts say the ratio reflects the dynamics of growing importance of Asia in the global economy.
The fact that developing countries make up for a majority of the voting power illustrates the changes in the world economy and also shows these economies' determination to jointly push forward regional development.
The second parameter in deciding the subscribed capital amount is member countries' economic weight. As the largest economy in Asia, China is expected to hold the biggest share, with just over 30%.
那么具体的分配比例呢，是按照每一个亚投行的创始成员。
The proportion is based on each prospective member's total economic output. Their weight is distributed according to the gross domestic product. So if your GDP figure takes up a large share among member countries, then you will get corresponding stakes in the bank.
Voting power is another key topic. China holds around 26% of the voting power. Officials say that there are 3 voting mechanisms for the bank, namely majority, special majority, and supermajority, which require 50%, 66%, and 75% of the voting power, respectively. Minister Shi says China does not seek the so-called veto power.
但是这个呢，不是中国刻意来追求的，因为这是按照各方。
The current situation is not something that China meticulously seeks, but rather it is based on rules everyone agrees to. Since China has a large GDP, then based on the calculation method, it has these stakes and voting power, and the AIIB is almost certain to add new members. When new members join the board, everyone else, including China's stakes and voting power, will be diluted. China's voting share will be smaller than it is now.
Officials say the next immediate task is to wait until at least 10 member states that hold over 50% of stakes approve the agreement before the bank can move on to the next steps. Besides ratifying the agreement signed on Monday, other following tasks for AIIB would involve environment safeguard, procurement practices, employment, and even examining qualified projects. With emerging economies holding majority weights, the bank may become an effective multilateral agency that promotes global governance and growth. 明天 CCTV News, Beijing.
Chitran Obat is now live in New York with more data on this story. We've seen quite the change in tone from Washington on the AIIB. The World Bank's president in a statement today described the institution, quote, as an important new partner, end of quote. What's behind this U-turn in the change of tone?
Ramah, if you can't beat them, join them. The World Bank and the U.S., now they've got no choice but to support the Asian Infrastructure Investment Bank. And that's because so many other financial powers have said yes. Allies to the United States like the UK, Germany, France, they've all signed up. So this bank is happening. At first, the U.S. opposed the bank because analysts say it wanted to keep the power. Experts now say that the U.S. saw the AIIB as a competitor to the IMF and World Bank, places where it has more influence. Now the U.S. is backpedaling, and the view is there will be more cooperation. The World Bank is now being more supportive because it says it can't handle developing the world's infrastructure all by itself. It spends about $1 trillion a year on infrastructure, but most of that doesn't go to the emerging markets. So the World Bank and the U.S. now slowly making that U-turn, as you've said.
Indeed, but at the end of the day, institutional reform at those two bodies, the World Bank, the IMF, has stalled for several years now, more often than not blocked by a lack of approval from American legislators. What's the objection in Washington?
Money and power. Analysts like the American Enterprise Institute told Reuters today that there's two main barriers. One is money. The U.S. government, it's in a difficult budget situation. It doesn't have enough money to spend on other higher priorities in the U.S., things like defense. So there are concerns about spending money for international institutions and reforms there, like the IMF and the World Bank. It's just not seen as a high priority. And as well, when it comes to power, there are further negotiations that have to take place to improve and to get these reforms through. And the Americans' view is that Europeans don't want to give up some of that voting power.
Indeed. One final question for you. 7 member states still haven't signed off on the articles of agreement at today's event. They aim to sign these founding articles later on in the year. What are their concerns?
Ramah, transparency and China having too much control. The 7 countries like Denmark, South Africa, Kuwait, they want more transparency in the lending practices and the way the bank will operate. So some of those details have to still be ironed out. And another concern is China having too much control and power to push its own geopolitical and economic agenda. Some analysts say that the fact that there are so many other countries, 49 other countries participating in this bank, heavyweights like the UK and Germany, that will dilute China's power and create more balance.
Indeed, we'll leave it there for the time being. Thank you for your input. We'll leave it there for the time being. Moving on, though, questions here of legislators in the Republic of Congo. They've cut the budget for the current 2015 fiscal year by nearly 12%, ostensibly to compensate for a sharp drop in global oil prices. The country is now on track to reverse a decline in oil output and leapfrog Equatorial Guinea to become sub-Saharan Africa's 3rd largest crude producer by 2017. Now, oil already accounts for roughly 65% of Congo's GDP. As crude oil prices collapsed in the last 12 months, however, revenues of oil producer countries like the Congo, Nigeria and Angola, all of those have collapsed and the currencies have taken a beating as well. Congo's budget, as voted by the 2 houses of parliament, was cut from an initial estimate of $5.22 billion. Now, spending was trimmed right across the board. Investment spending was cut by nearly a quarter. Salaries for state employees and debt service were the only areas where spending was not affected. Still in extractives, Ghana's president has replaced the head of the Tema oil refinery in yet another management change at a cash-strapped facility which processes 45,000 barrels of crude a day. Ghana's only oil refinery, however, has been plagued with regular shutdowns and a lack of funds. The new managing director, Kingsley Awadako, will be the refinery's 7th managing director in 10 years. Ghana produces roughly 100,000 barrels of crude every day at its offshore Jubilee field, but it has to import quite a lot of the oil that it consumes domestically. Mr. Mahama said last year that the government is looking for an external equity partner to run the refinery. Quick run through equity markets here for you. Interesting developments across the board. It's a very balanced picture that we're presenting here today. Oil and gas companies listed at the NSE Nigeria leading the charge, leading of course to that to the market as a whole. The Ultra Index closing over 1.2% higher. However, elsewhere in South Africa and Egypt, markets closing lower. South Africa in part being particularly hammered by second round effects from the jitters, of course, around the Brexit. We'll be talking about mobile money next. Econet Wireless's Zimbabwean unit is looking for mobile cash transfer services in South Africa. And Nigerians welcome forex controls. The CBN, of course, is struggling to shore up the Naira. That story is coming up next. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening. Global Business, weekdays at this time on CCTV Africa. Welcome back to the program. You're still watching Global Business Africa from the Kenyan capital, Nairobi. Now, let's talk about mobile money, specifically Econet Wireless. Its Zimbabwean unit aims to register 1 million mobile money transfer customers in South Africa in the next year and a half. The company already has a green light from the South African Reserve Bank to roll out its money transfer service. The EcoCash service will see cross-border cell phone money transfers taking place between South Africa and Zimbabwe. So far, 4.2 million customers in Zimbabwe are on EcoCash. Econet has partnered with Flash Mobile Vending, which is a subsidiary of Pepco. Flash, in turn, is partnered with Mercantile Bank, and it has received the bank's approval to operate the new Flash to EcoCash remittance service in South Africa. Now, still in South Africa, it's one of several African countries that missed the deadline to move from analog to digital transmission. Policy uncertainty and ongoing legal wrangling is delaying the process even further, even though most countries had a whole decade to prepare for this shift. Sumitra Naidu takes up the story.
Despite being the most developed country in Africa in terms of infrastructure, South Africa is way behind in migrating from analog to digital. It missed the June deadline set by the International Telecommunications Union to switch over because of policy delays and lack of consensus on how the process should unfold.
Since the process of migration started over 10 years ago, we are still in a situation whereby there's an undecisive position. Government has no clarity as to which direction it wants to go, and it's currently mingled with lots of politics unnecessarily for that matter.
The government has been battling it out with local broadcasters over encryption. Initially, it wanted set-top boxes, the devices needed to receive the digital feed, to be encrypted, but backtracked later and now doesn't want the encryption. Free-to-air broadcaster ETV challenged the decision in court, arguing the benefits of encryption, but lost its case.
To say encryption is a vital component towards migration. It frees up, it actually creates job opportunities, it ensures that there is no current situation like we have right now when you have only one digital monopoly.
The court challenge has dragged on for over a year and has not only delayed the switchover, but also the manufacturing of the set-top boxes had to be put on hold.
We as manufacturers are hurting at this position. We've lost a lot of manufacturing concern in South Africa. A lot of the manufacturing has left overseas. We lost a lot of it to Asia, many in China. We've lost about almost roughly, we estimated about 500,000 jobs that should have been created by the unbundling of the migration.
The delays continue to tie up analog spectrum needed for the expansion of broadband services, which will bring much cheaper and faster internet access to millions, especially in poorer communities, as well as lift GDP.
The biggest delay, in my view, is the impact that it has on delivery of broadband to all the South African institutions and to all the households in South Africa through broadband services as per the broadband policy and the government plan that's being put in place.
ETV is still deciding whether it wants to appeal the court decision, but any further legal action will weigh on its balance sheet. However, the broadcaster believes the implications of non-encrypted set-top boxes will be costlier and a disadvantage to viewers. It's hoped the government and broadcasters will reach agreement on this soon. Even if they do, it will take some time before the switchover can actually happen, as 15 million set-top boxes still need to be manufactured and distributed. In the meantime, the analog signal in the country is at risk of signal interference from some of the neighbouring countries that did meet the June deadline to switch over. Sumitra Nadu, CCTV, Johannesburg.
On to Nigeria now. Many there have welcomed a directive by the country's central bank to stop the sale of foreign exchange. However, while the CBN's latest move is designed to boost local production and the local currency and preserve what little reserves the Central Bank of Nigeria has, the short-term impact may be a weakening of the naira and the rise in the cost of imports. Andrew Thompson has the details.
In order to beef up its fast depleting foreign exchange reserves, the Central Bank of Nigeria last week halted the sale of foreign exchange to importers of rice, private jets, textiles, tomato paste, poultry products and other items. Many Nigerians welcomed the move.
I believe that it's a step in the right direction, particularly if you look at some of the commodities being mentioned. Why on earth will we still be importing toothpick, tin fish? And okay, yes, private jets for those who can afford it, but it shouldn't be a national priority. And so, if those luxury goods and the goods that we can produce locally, somehow, maybe because they don't want to place them on outright ban, but they're now saying, go and source for a foreign exchange if you must do this, I think it's a welcome development. We must ration what we have in the current situation.
Nigeria's central bank has struggled to shore up the naira against the impact of falling global crude prices since mid-2014. Its impact has been limited, and the naira has fallen from 150 to over 200 presently against the US dollar. The bank hopes that tightening imports will help localise jobs as well as boost the currency overall.
Do we, as a people, realise how many jobs we are creating for other countries by ignoring local production and simply concentrating on imports? How can we keep complaining about the depreciation of the naira when all we do as a people is to import everything from ordinary geisha sardine, toothpicks, and even eggs from neighboring countries? These are some of the fundamental reasons behind the bank's recent announcement.
The CBN has sharply reduced the amount of foreign currency made available through official channels. The result has been a sudden growth in demand for black market dollars. Many irregular traders believe that the tightening of available dollars by the central bank will simply cause the naira to even drop further.
This time, they reduced the value from 300,000 to 30,000. So that 30,000 cannot be enough for the country actually. So you can meet with customers coming to buy the currency while he doesn't have it. If you can check the market now, dollar as yesterday is very, very scarce. No dollar for market. Even to get $100 is very difficult to get. So that's why he makes the dollar to go off and naira devalue seriously.
In an effort to fight back against the black market, the central bank has issued warnings to banks and also tightened the amount of dollars it provides to them. This resolve will be tested in the coming weeks, and the move could also impact on the popularity of President Buhari's government. Andrew Thompson, CCTV.
Now, Zimbabwe's largest company by revenue, Inscore, is poised to unbundle and list its fast food business on the stock market as a standalone firm. The company, of course, does face quite a bit of competition from new market entrants. As Farai Mukhtar reports, Inscore also needs to streamline its operations.
The diversified conglomerate has interests in retail, distribution, and manufacturing, but is best known for its iconic fast food brands. Their success has inspired many.
There's been no shortage of new entrants into the food industry in Zimbabwe. And just to show you how cutthroat the competition is, right next to this in-store outlet in downtown Harare, its biggest competitor, Chicken Slice, has set up shop. And to undo that, in-store forced to open another outlet just a stone's throw away from here.
And that's not to mention all the cheap alternatives on the streets. It makes sense the company is planning an exit.
The food business in Zimbabwe is facing huge pressure in terms of margins. I think you remember in the 2009-2011 period, a lot of investors went into fast food businesses, and I think there's just too many competitors who are compressing the margins.
But unbundling could allow the fast food business to focus on its core business and cut down bureaucracy that is characteristic of large conglomerates. Its plans follow a similar exercise by construction company Masimba Holdings, which earlier this year cut ties with its plastic manufacturing division, Pro Plastics. The company successfully debuted on the local bourse on June 8th, trading at 3 cents per share.
We've got absolutely no doubt that the balance sheet size that Pro Plastics has got, which by the way also compares very favorably with Masimba's balance sheet, will be able to leverage Pro Plastics going into the future. I must also hasten to add that there's exciting opportunities going to the future in the markets in which Pro Plastics operates in Zimbabwe, in the region, and certainly with the continued plant modernization where Pro Plastics is hoping to compete with the best in the world. We've got absolutely no doubt that it will be becoming a blue chip status company in the next few years.
Opportunities abound too for retail investors.
There's a general trend with spin-offs that soon after delisting, the share price falls sharply. Now that is the result because previously in the holding company there were institutional investors who now, because of their specific investing mandate, cannot continue to hold shares in this spin-off. So right just after the spin-off, the separate listing, you will see a large sell-off, which will send the share price down. But that has nothing to do with the fundamental value of the business. So we view that this sharp fall in prices will provide a very important buying opportunity for a lot of retail investors, because eventually the share price will rise as the fundamentals begin to reflect in the business.
With analysts backing the standalone fast food chain, which is present in 6 other African countries, now may be the time for those with a little extra cash to get on board. Farai Mwakutuya, CCTV, Harare, Zimbabwe.
Right, then a quick run through commodity prices here for you. Not much development from the trends we have seen, of course, over the last couple of trading sessions. Oil still languishing in the low 60s, partly because of the glut of supply that we're seeing coming through in the market. Some interesting developments on the cocoa front, however. Cote d'Ivoire looks like it might be putting quite a bit of cocoa beans, into the market in the next harvesting season. A lack of quality seed is threatening Uganda's food security. We'll have the details on why that's the case next. Now then, given a shortage in higher quality seed, Uganda is now facing a potential food production crisis. Agricultural experts over there say many farmers are planting crops with substandard seed bought from the open market, and that in turn has ripple effects down the line. Crops and the yields they produce are likely to be substandard, and that situation may seriously affect the country's food security, despite efforts by the government to boost output, as Hilary Ayesiga reports on Grassroots tonight.
Surveying the progress of his crop is part of the daily routine for this farmer in central Uganda. George Kirabira hopes for a good harvest from these 30 acres of his maize farm. But he is concerned about the quality of the seed he used, seeds he bought on the open market.
You find that you buy seeds, you bring the seeds and they don't germinate. You find you buy the seeds, you bring and you find weevils in them. You ask yourself, how comes a treated seed contain a weevil? You find seeds which are already rotten.
Uganda has 22 companies licensed by the state to produce hybrid seeds, cross-pollinated for a high yield. But Uganda's Agriculture Ministry says that's not enough to meet the demand for these improved seeds.
The number of companies, registered companies engaged in seed, do not have enough sufficient capacity to produce the required amount of seed for the farmers.
And that creates a market for traders to sell seeds that look like improved seeds but are not improved seeds at all.
They color them, package them in with the same labels of some of the known seed dealers. The farmer will come, eventually will replant the seeds that he has got from Kisenyi, coated with everything, the colors, then he will plant, eventually will not get the right yield.
Licensed seed producers say convincing the farmers to use the improved seeds is another challenge. This supplier says he has inventory that just sits in the warehouse.
The fact that I'm stuck with improved seed and agriculture is ongoing, and yet I'm coming back to pick my seed, which was not sold from this agro-input dealer. What does it show? That maybe we need to create more awareness.
Authorities are now looking to increase the number of seed sector players to boost productivity, to increase funding for research and enact legislation that would help weed out the sale of fake seeds. More than half Uganda's population is employed in agriculture. The government is keen to promote increased productivity, but realizing this goal could be difficult unless grassroots farmers can access improved seeds and deploy modern farming methods. But for now, farmers have resorted to finding means of developing their own seed banks where they can manage quality and supply of seeds. Hilara Yesiga, CCTV, Central Uganda.
Quick run through the currencies here for you. Two stories of interest to you. The Kenyan shilling breached the 100 shillings to the dollar mark in trading today. Should be interesting to see what exactly comes out of the July 7th Monetary Policy Committee meeting, the first one with the new governor in force. Also, Ghana apparently likely here to clear its review of its first nearly $1 billion bailout with the IMF. A review on that is supposed to come out later on Tuesday. Now then, here's what we're working on for tomorrow's program. We'll be looking at the talks between gold mining companies and unions in South Africa. They put an offer to raise wages over there. Whether or not the unions will agree to that, we'll have to wait and see. We'll have details on that later on tomorrow. Still in mining, there's an end of an era in Zimbabwe. Rio Tinto is pulling out of the country after more than 60 years there. Now, this exit marks an end to the miners' interest in the country's diamond and coal mining sectors. But does it send a negative signal about Zimbabwe? We'll be looking at that and plenty more in tomorrow's edition of Global Business Africa. As always, we value your feedback, your thoughts and your ideas. Send them to globalbusinessafrica@cctv.com. As always, our Facebook page and Twitter account are spewing the news 24/7. We'll see you over there. I'm Ramah Nyang. Thank you for watching.